Welcome to Momentum Monday. Today is September 17th, 2023. Howard, happy birthday. How
That's
old do
right,
you feel?
baby.
How old do you feel?
58. 5'8". Big 5'8". Thanks, buddy. I am I just got out of the Pyrenees Mountains. Oh, I don't know if that was not a vacation, I like to say. That was the hardest vacation I've ever been on. But it was
You made
really
it.
fun. Yeah, it was kind of more like survival. You understand because you like sports. It was just like there's no way out. You can get in the car or you can just pedal. That's your two choices.
Well, I'm glad you managed to do it. So
Yeah.
let's talk about the markets now.
Yeah, it feels like I didn't miss much, but catch me up. It's like I
Didn't
feel
miss
it's a good
much.
week to not
It,
miss. Yeah.
yeah, it's a range-bound choppy market. We have up days followed by down days, a lot of just back and forth choppiness. Overall, there's more distribution under the surface than what some of the indices are showing. I mean, just because a few big tech stocks are still holding relatively well, that doesn't mean that the majority of stocks are really doing that great. And if you look at
Mhm.
something like Russell 2000, just hanging on its 200-day moving average, or something like the Nasdaq Composite, which involves more stocks starting to
Mhm.
kind of hanging also below its 50-day. So there's definitely been some selling under the surface and more distribution, even in big stocks like Apple. If you just look at the volume picture, like the big red bars, and they're kind of showing you the story that there's
Yeah,
been
there's like a lot of them the last since August, huh?
yeah more selling than anything, but still choppy markets. Still, there are sectors that are still doing relatively well, like in particular energy
Yeah.
continues to slowly climb, and it's not just oil and gas, but uranium and coal. Well, not this one. Which was the other one?
Yeah,
Uranium,
we talked
super
about it
strong.
on Trends with Friends. Wow, yeah. It's
Anything
just
related to uranium has been just skyrocketing. Obviously, as the world is figuring out that, oh, maybe the future is electric vehicles, but we need something to fuel those electric vehicles. And since it's not going to be oil, it's probably going to be coal and nuclear and
yeah, it ain't gonna be wind. Uh
or solar. I mean, solar has done
I
horrible.
think it is solar, but I don't think there's pricing power there. It's the goddamn sun, for Christ's sake. Um But it looks like nuclear. I think the world underneath is voting, right? Like it's a voting machine, the markets
No,
and uranium.
in coal, basically, yeah. Coal is still the biggest. These are all
Well,
the biggest.
coal is cheap and dirty and very on par with the world, right? Like you take away supply and the demand doesn't disappear. And you take away ways for people to invest in coal as like the Van Eck ETF. Like the only
Yeah,
vehicle to invest in coal is just there's only a couple ways to own it. And ESG, just when everybody got what, or not everybody, just when the ESG people got what they wanted, oil, we fucking have no reserves. It's just, I think this is just the world voting on the state of how bad leadership is in general right now. The market doesn't want to crash because there's a lot of great companies with great earnings, and AI is super interesting. No matter what country I go to talk is AI. It's not crypto, it is AI. AI is real. It's over, but we're so like first inning because AI is flawed in that it's based on people, which are flawed still. So it's still very early, but you can see why what's winning NVIDIA and semiconductors and Google and the big tech, the guys who can, the governments and the people with money are winning right now.
yeah. Google,
Google didn't
Microsoft,
give, Google had like with all those distribution days in Apple, Google's just fucking consolidating here, right?
yeah, among the strongest. Yeah,
No
definitely.
volume, just
Yeah,
creeping, and
yeah.
there's no selling. Like all those distribution days since August in Apple. And if you go back, let's go to the daily. Yeah. Um, yeah, look at all those distribution days in the daily. And if you go to Google, it's just people swapping. Yeah, it was a pretty big bar on Friday. But
Friday was like kind of quadruple
one
option
day is not a
operation
trend
day.
make. So I think everybody's trying to be optimistic, right? No one wants to pull the ripcord on stocks, but at the same time, just politically everywhere I go is a mess. From France to Spain to Tel Aviv right now with Netanyahu and the United States with Trump Biden. It's just it's just Congress is a mess. So anyways, like that's the world we live in, right? But earnings drive the markets and they haven't disappeared. But so other than oil and
Energy has been kind of the only thing working. I mean,
is
financial.
that it? Like healthcare's kind of not decided. XLV.
I mean, pretty weak below its 200-day moving average. I was going to mention financials kind of starting to wake up, and all of them went up after their earnings last quarter, and during August they kind of had a big pullback, and now they're starting to revive just
Hmm.
a month before the next earnings season. So this is something that to me it's interesting because banks tend to make more money when interest rates are high and going higher if they did
Yeah.
the job right. Uh, so this is one of the sectors that is bouncing. So there is a constant rotation. And what's interesting about the strength in energy, as we mentioned, is that it's happening at when the US dollar is super strong in the background, which is
Yeah.
something super unusual when you have a strong dollar and then strong higher energy prices. As I said,
Yeah.
imagine what would happen if the dollar pulls back.
What do you think if the dollar pulls back? That's good for stocks probably here.
Oh yeah, for the majority of stocks, especially tech, yes, but usually
That's
not.
what JC and I were chatting about it in Trends with Friends, is that a strong dollar here does not bode well. Everybody was calling for the collapse, and now you've got the rally off all that sentiment, all the new macro experts that got blown up in VC are now all of a sudden macro experts because it's so easy to do macro.
Interest rates continue to
Um,
rise, and let me show you the 10-year. Here you go. You have the 10-year here setting up for potential breakout, like
it
4.3.
just it's not, as just a person who worries, not like make a decision on this. You've got these rate this setup is so bad for wealth disparity. It's just so easy for rich to just say, "Hey, I'll take my 6%, 5%, not invest." And they get paid for being rich at a time when so the guy anyways, like that has nothing to do with where I think stocks are going, but this is the wealth gap is only going to
I
get
think it's part of
tremendous.
the cycle. High interest rates are part of the cycle, Howard. And during low interest
Yeah.
rates, we got a lot of ideas that maybe a lot of businesses that maybe should not have even exist. And now during higher interest rate environment, there's still going to be great businesses and great new ideas. There'll just be fewer of them. So it's just part of the
Well, I
cycle.
think you're saying something important there. Businesses. There was a lot of great products that were confused that they were assumed could be businesses, and they were funded as if no worries, we'll figure out the business later. And I think what we're seeing now, like in my industry today, I think Airtable, which is like the Excel killer, laid off 50%. They've raised $1.5 billion to get 150 million in revenue. This is Airtable. It's a private company, and it's a great product. That not enough people are willing to pay for at unicorn level, and so you had a lot of great products but not enough good businesses. And I think the next cycle will build stronger businesses. It's just a question of how much pain do you have to suffer. And I think the financials are key, right? Like even Robinhood, like they must be printing money with 6%, with the spread they're getting from holding cash and everybody running into cash. So, the financials are okay here, or at least the financials that are
Well,
relevant to,
yeah,
the five big
exactly.
banks.
Yeah.
It's amazing how bad Schwab is. Like they have a monopoly basically, and they're just handed a monopoly by the government, strategically owning TD Ameritrade. So they basically own the custodial business. So again, I've said this before, but while we were chasing Google and Apple, Congress was chasing all of Facebook. TD merged with. You basically have Morgan Stanley, Fidelity, Schwab is TD. You have like three companies.
Mhm.
They're gonna jack consumers. So while the consumers are just gonna get absolutely screwed going forward from these financial conglomerates that control the pipe. So I worry about that because anybody with money is just going to see their fees go up. Um, but we'll see. You would think Schwab would just be crushing it here, basically given a green light to just have a monopoly and the rate environment where it is. But so I don't know. That one's confusing. Um, but the XLF says I think we're okay. And by the way, sentiment's so bad, right, Ivan?
Yeah, I mean, it doesn't take much, like a couple of days of selling and sentiment goes super bearish.
Sentiment's so bad, and this is seasonably a weak period, so the market's doing fine, all things considered.
Yeah, pretty much. I mean, the moment too many people turn bearish, the market's probably going to bounce and vice versa. That's what happens in range bound choppy market. It's interesting to see last week Netflix getting pounded, pulling back several days in a row.
Well, they said that advertising isn't working, but I just have a feeling it is working. That one caught me even by surprise because I thought that I had heard rumors that it was crushing the advertising, but then they came out and said it wasn't. So yeah, there is no room for a company to announce mistakes right now.
Yeah, Tesla was one of the few ones that showed relative strength last week. They gapped up, rallied. I think after they were upgraded, someone said they could be a big AI play going forward. Have several catalysts going for them in the next year or
The
so.
biggest catalyst is just he's not scared. You can call him whatever you want. It's just a new phenomenon that he has.
Tesla
I
has
can't.
the economies of scale advantage and cost advantage. I mean, they can.
He also has a media empire and a bullhorn, and he controls. He's Rupert times 10, right? Like if you're his enemy, he can fucking make your life. One tweet, he can just wreck your life. You know what I mean? No ads, no nothing. He is literally, if he turns his hose on you, so I wouldn't. I mean, you got to stay clear of this, but like it looks super, and I wouldn't short this thing. I don't. This thing looks like it could rocket Tesla. Like how do you stop him? I mean, that does not look bearish.
I mean, it's a
Tesla
great
may be
product.
one of the best looking charts out there.
Currently, yes. Yeah, right now, yes.
Yeah.
And
And think about it. Everybody, the media is just, again, whether he deserves it or not, I don't want to get into, but the sentiment is super bearish on Elon. For me, it's easy. Just use Twitter less, and I don't have aggravation. Like, but most people in the media can't, right? Like he controls the news cycle, like Trump did, and I don't know. We haven't seen anything like that. So Tesla's interesting to me because it should be much lower based on the economy and competition.
I mean, there's competition, but the competition is making the cars. They're selling the cars at a significant loss. And it's really
But
hard to
like I'm
compete.
saying, like exactly, like in any other market, this would not be good for Tesla, but like he's controlling the market. Wow, that's
Look
an
at Japan. I
interesting.
mean, it's not just Honda, it's just also Toyota or anything J Japanese.
Mercedes is doing well too, I think. And Mercedes is
Mercedes not really. I mean, Mercedes is basically just like the typical European stock paying 5-6% dividend a year and not really achieving anything in terms of capital gains for decades. Let me pull it up.
No, but I mean, if you bought it right, there's been a few points. Look at that. You bought it in 2020. That's not a bad return.
Okay, in 2020, during the if you bought anything in 2020, you probably
No, but it's held its gains. No, I'm not. Listen, I'm not saying go out and buy Mercedes, but like they're copying the best of what Elon does. Germany's full Tesla mode, right? They've gone full direct distribution. Just Germany's a big market, and their Mercedes is learning, and they're not going to let Tesla control Germany. But so yeah, so certain automakers doing fine.
Yeah,
Huh.
I was going to mention that it's just the entire Japan, as the Japanese yen has been pulling back, Japan has been doing really well in general.
Hmm.
Most of their stocks. So you have Toyota,
Wow.
Honda, yeah.
Okay. All right. Well, I think seasonality, something's going to happen in October, November. You gotta just
Yeah,
get, I think,
FOMC this
gotta get a
Wednesday.
clearer sense of direction. It seems like Google is shaping up well. Tesla looks interesting.
I mean, there are not that many great long setups right now. So maybe the market just needs more time. Everyone's waiting probably for the FOMC to pass this Wednesday to see if they're gonna. Most likely they'll keep the rates the same. Maybe they'll raise them 25 basis points.
JP Morgan, what, they came out and said that the Fed's done. So I don't know if they are the Fed, but they basically said that.
It's very possible. This is the most popular and consensus scenario, not doing anything. So
Yeah. Okay, buddy. Have a great week. I will be back finally on my desk next week.
all right.
All right, everybody, have a good week.
Bye.